Hey guys, just a quick update for those that tuned in this morning specifically or not in the room. The market's pretty well doing as, if you recall, off those levels. After the CPI this morning, we got up to this high, right? Remember on your Murray math, plus 2/8. We're looking at the hourly here, then through the day, so that was the immediate reaction. If we come over here, there's your immediate reaction on the CPI, so we didn't quite get to that high. A, B, C, your three ways. The question was what this is going to be here, and you'll see when I go 5 minutes. There's a clinical short here. Look at that, 3 previous highs. You got your divergence on a lot of your indicators, and those that looked at your market profile this morning, remember the top of that range. We'll go through that real quick. Here we are, we're testing key levels. It needs to hold all this. Bottom of the cloud, bottom of this channel. Remember we said if it breaks this channel and get in here. So watch that where everyone is. This is the roll today on Dec to March for the S&P. So there's going to be a lot of silly stuff in volumes. So be careful. Just being mindful of that. Okay, real quick on the 5 minute, you'll see what I mean as we break that down. Let me bring that over for you guys. Here we go, here we go, here we go. Okay, so there's your CPI punt that we saw. Remember, that's relative if you go to your hourly. Then it failed. This was your given. That was your sell right there. You could have sold there if you're long. That was an easy long trade. For futures traders, right on the news, you had time. And all the details of that are on the site as far as CPI. Then we had 1, 2, so that was your ABC. This, your bulls that had to hold here. But now we have a higher degree, right? Remember, A becomes B, then C. If this is bearish, this actually becomes 1, 2, right? That's what they call that. And this would be the part of a third wave, and that'd be your fifth. Sorry, it wouldn't be. Yeah, that's correct. So there we go. So remember, that's your level. So we come across on your hourly. This is all your support, right? And there you had your Johnny in the room asked a good question earlier. Look what happens when it accelerates, tanking through Cajun. The thing is, you had this twist down here to pull it. And lastly, on your hourly, we've had, and the 5, this is your daily. We're still not red here, so keep in mind, don't just trade at the market in this sort of pattern. You know where your resistance is. For bulls, this is just a reverse head and shoulders and pops. So that would be your ABC complete, would feed that. For bears, this is your whole ABC. And I can't strew enough to keep it simple. Know your rules and don't be umming and ahhing. If you're trading futures, trade them. Don't just come back. Watch them, right? Doesn't mean you have to be in a position, but you need to be watching them. You need to feel the market. Okay, Apple here. Look at that, punching new highs. That's going to be a big thing. All you read about is Apple, Apple, Apple. So that's pretty saturated. Look at this. We call it taking out the trash. The Russell Index. Look at that. That's your weakness. So nothing new. Nothing to report on oil, just spinning. Nothing to report on Natty. Last but not least, here's your volume profile, right? So there we are on all that. So we got above, we're just hanging around there. There's your POC. This is an updating for that. That's because I've got that there. There we go. There's your POC and your tank, and nice to have it. So we're just underneath that. This is all your support or supply. Some people call that a shelf. And that's just under your optionality. This is where everyone's long their calls. Lots of comments that it could only go up. So there we have it. I hope you enjoyed it. Any quick questions from anyone in the room? Okay, we'll call an end to that. Hope any questions, just jump on it, like it, share it. If you are trading S&P, I hope it's helping to you.